of all, I'm going to make you understand internal and external structure again in general. So, external structure is the outer part of the market structure. Internal structure is the inner part of the market structure. Just like you have, just like you have your body. So, I'm gonna use this. Oh, sorry. Where's my rectangle? So let's say let's assume you have your body like this externally, and then you have your internal organs, your brain, your heart, your intestines, right? So this external part is called, in the forex smart money concept, this is like the external. Market structure is like the internal. Okay. Now, inside this internal we have fractal. Okay, but that's not all that's very important right now. But yes, we meet it in the market structure, we are marking life chart and everything. But you have to understand now, in forex, if this is the external, in forex, now let's focus on forex. We'll make the external red. This is the external, then the internal is blue, inside is showing purple, right? Then let's remove fractal out of the picture for now. Sorry. All right. So if this is external, sorry, if this is external, this is internal. For the weekly, for instance, okay, this is external, this is internal for the weekly. Now, what this simply means is that when we come to the daily, this internal will become the external. So I'm gonna make it blue or maybe purple. Do you hear me? So this one that is internal is the external in daily charts. So don't get it twisted. So let's do it like that. Don't get it twisted. So this is it. And the daily will have its own internal. Remember, now this internal in the daily is going to be your external in the 4 hour. Bro, do you hear me? It's going to be your external in the 4 hour. In the 4 hour, and the 4 hour also have its own internals too. Now that's where it ends. We don't. I personally, I don't try to um go lower than the 4 hours when it comes to market structure mapping, to avoid maximum confusion. Okay, to avoid maximum confusion. So on 4 hours, we only want to now choose POI we have to trade, so that we don't have too many stuff. You don't see me marking too much structure of 15 minutes. It's going to be very confusing. So this place that is inside the daily now is now the external when you go to 4 hour, and the 4 hour has its own internal. Now let me explain something better to you. Now, because the weekly, even the monthly is the same. This external in the monthly is internal. Sorry, this external on weekly is going to be internal in monthly. Monthly has its own external. That's like the highest market structure ever, because monthly stops at monthly time frame. So the thing here is this: because weekly is a very high time frame, you should not bother about caring much about this external in the weekly. You have to focus on the internal when you're marking out your market structure. Do I say you should not mark the external? I'm not telling you don't mark the external. You can mark it, but your whole focus and brain should stay on the internal, because bro, the external range is too large. And we just have 54 weeks, 54 candles, or sorry, 54 weeks in a year normally. So therefore, we have 54 weekly candles in a full trading year. So you have to predict 54 candles in a full trading year. And that 54 candles cannot make up this external. It's going to be internal. So why are you stressing about what? So you just mark up the weekly external once and for all in your trading pair. Don't touch it. So what you should touch only is your what? Internals. Okay, those are the things that you have to now look at because these internals are making up for your daily externals. Now, even your daily external, don't worry that much about it. On your daily, you are going to be worried much about your internals for to take trades. Like for every day to day this thing, what you worry from day to day basis, every day come to the chat. All these ones are like permanent. These ones are very large, so they are permanent. All these ones are permanent. But you see, this one is what you now have to be looking at day to day. So when you watch the chalk strategy you see below, the first the chalk strategy, you find out that on the daily I'm not trying to do eternalist, internal, all those kind of things. When you're watching that chalk strategy back test, you find out I'm not trying to do plenty external, internal on daily time frame. I'm just focused on a certain kind of market structure, higher, low. That is the internal. That's why I did not stretch on it. But I know a lot of people were confused because I started talking about external and internal. They did not see me do it on daily and higher time frames because yes, you have to draw it, but they are not all that paramount. There is a time frame that these things are way more paramount is on the 4 hours when you know that your externals are paramount. I get me? Because these externals is the internal of the day. That you're looking at the internals of daily is reflecting your 4 hours, but externals. Okay? So if you have questions, you leave it for the classes and you ask. So let's go straight into the charts to show you what I mean by all of this. Delete. Alright. So now I'm going to show you a better example. So now let's assume we are on the weekly chart and price does this. Okay? Now does this, does this, does this, does this. So yeah, I want to stop here. Now l- we are assuming these areas are what external areas on the chart. First of all, to get your external areas on your weekly chart, you have to start from monthly. By the time you are able to identify monthly externals, which you know there's no other time frame higher. So if you identify monthly externals, the highest and the lowest point of a monthly time frame and everything, which you see here in live charts, you can now identify the internals because you now know the externals. From that, you know that the internals for monthly is your weekly externals. Then you mark it out, then mark out your weekly internal. From there, you know that your weekly internals is your daily externals. So from there, you can be able to identify all the externals of all the time frames. So that's why you have to start from monthly and um, draw something permanent you never clean. But looking at price action and day-to-day activity, that's when I said you have to focus on the daily internals. So yeah, so in as much as this is sorry, so in as much as this is your external, remember you can make use of this tool to mark. See this tool here. Let me start from here to show you where the tool is. No, not that. Highlighter, right? So use highlights. High, low, this high. Now, this is where I want to lay emphasis on. Why did I oh my god, what the fuck is this? Why did I ignore this low, and mark this? That's where I want to lay emphasis on today when it comes to external structure. Why didn't I mark this low, then this high retraced? Just like what I was explaining the last time in class. I went to do some further study, research, and all that stuff. I found out that that can also, you know, you might still have the same bias because of yeah, it's just like you're marking the internals and when price change structure. You see bias, but you will get fucked at some point, and the place you get fucked is on areas like this. You get fucked in areas like this. Which tool will I use? Areas like this, you get fucked because you think that you have changed structure. So you keep looking for buys, even when we get to areas like this that are for potential turning points around supply areas like this. You keep looking for buys because you are in an uptrend because you're always seeing the internals. Do you get what I'm saying? So that's why it's dangerous. So when you're marking, why you have to ignore this and all these small internal breaks and lows is because they are minor. Now, how do you know the particular low that is supposed to be the main low, and how do you know which one to ignore and the one now to choose? Now, when price has been able to break through one of the small highs formed, that's how you cement that here is the main low. Once it's about to happen, that break, that huge retracement that is high, retracement that is higher than the rest, that at least broke one of these highs, then this is now the next. Why you going to mark your BOS? It doesn't matter. You can mark your BOS like this, like that, but that is not your low. This is your low because it's at least I've been able to break one of the internals that are small. Okay, so this is an external structure. So by that, you have had a new low and a new structure high. You get a new what? Structure high. So now you are now aiming for this low. Okay, you are now aiming for this low. So that is what I mean. You get, that is what I mean by having to understand the external structure. Now let me do another example. Now this is another example I'm going to show you. You might ask, so what if that is only one time it happened, like one happened once, and then you now see the next? Yo, this is not a new high. This is an internal high. So when you're marking the externals, don't include this and say, okay, we have now shifted bullish externally. Don't do that. Okay? Because this guy, as it pulled back, it did not break above anything. Just a small. The one that should be respected is this one that broke above something. So therefore, this low will not be regarded as a new low. So we now have this, in this case, this and this as our external points. Okay, good. So now looking back at this, if this is a weekly external, then this will be what? Weekly internals, right? Now I like using red stuffs to mark them. So pardon me using blue. I need to use the same lines every time so that you guys become familiar with my way of marking. So if you look at my markups posted on the charts on the Discord, you always understand. So look at how we are making higher highs, higher lows, higher highs in the internals. So if now around you're around this part in your trading now, you know that okay, you'll be looking for buys. Oh, now this is the weekly chart as big as this is. I getting me? For all this, for price to move like this, break and come, do you know how many weekly candles? So imagine you are now being too careful about the external structure and say, okay, I want to only sell if you get the external structure. Do you know how many years it will take for price to get there? Since 54 candles make a year in the weekly chart. So do you know how many years price to get here? That's why I said it's good to mark your external structure, but always mark your internals so that you can follow price slowly till it gets to a premium POI. You know what premium POI means, right? I taught you guys this discount and premium. So until price gets to a POI that is in this premium, that's when you have to stop and start looking for a reversal. Okay? Very simple. Now, another thing I want to add to this is this. This internal breaks you see is external breaks on the daily. Now, in this case, this is how the daily is going to be looking. This internal break you see, internal structure you see. On the daily is going to be external. So now this is how your daily is going to be looking like, right? So let me show you that. The daily is going to be looking like this. Uh, higher low. How it's going to be looking. You're not going to be seeing all that big bearish this thing, but because you have this your area all marked up, that your bearish supply all marked up on the weekly. Oh my god, I think I'm having some network issues right now. Okay, so I think I'm back. So in as much as you have this big bearish area here, supply, therefore you now know that okay, here will be a turning point. That is now why the external is useful. But now remember, this is the daily breaking highs. So every candle inside this week, one, two, three, signifies a day. So imagine you are so worried about these daily externals. I getting me? Imagine you're so worried about these daily externals. you become too confused. Now let me draw the daily externals very well so I can see it. I'm still drawing it like an internal structure. Sorry, I'm having network issues. Definitely where it's coming from. This Wi-Fi is funny. So let me see. The daily external is going to be looking like this. Okay, it's going to be looking like this. Okay, headed towards here. Now, this is the daily structure mark, including the internals, so I can understand this better. Now, how are we going to mark our external on that daily? The same way, low, high. I'm choosing it as a low, I'm choosing it as a high, I'm choosing it as a low. Now, why am I choosing those points as high and lows? First of all, I have a starting point, low and high, fine. So we're breaking structure to the downside internally, okay, that's fine. Now, this is the first time price was able, this is okay. Though only the first time that price was able to reverse. Now it's not gonna be a confirmed low until price has broken this high. So all this while we don't care what it is, right? But because we know we are on an uptrend, then we can maybe work with a POI around here. But we don't. This is not a confirmed low until price breaks. Now when price break, do you see that it created this high and this shift and I ignored it? I get me, I ignored it. Why did I ignore it? I ignored it because when it broke, it did not break another internal low. It just retraced internally. This is internal. I get me. It did not do like this. If it did like this would be a new high, but it did not do like that. There is only one low that did like that, one high that did like that. This high shifted like when it shifted like this, I did not take it as external high too. When it did like this, then it now shifted again the second time, breaking this. That's how I cemented here as what a high. And now it retraced to wherever I want to retrace. I know that this is now a high. So now this particular um low now cannot be confirmed except price what breaks this high and not confirm it as a low. But in real time, if we find ourselves here and we have not seen this long swing, can we trade this? Yes, of course, as long as it's in a discount POI. As long as it's in a what discount POI, yes, we can take trades from there. Now, I told you guys that on the daily you have to be more what in tone with the internals more than the externals. So let me not confuse you guys. This will be as black right now. Okay, this will be as black right now because now these are my what daily internal externals, right? But these internals will be what with red bricks, right? Now why I told you that you should be more focused on the internals even on daily is because for every of these short swing, a lot of daily candles will be here, a lot of daily candles, a lot of daily candles. Now imagine you are waiting, you're trading the externals, you're waiting for price to pull back to this place to take your buys, to now looking for buys in this POI. Do you know how many weeks and months to take for price to get here? That is why you have to what? Trade the internals of the daily. So now that internals of the daily now is all these ones you are seeing here. You know that okay, so what you do, you go and draw your what? Your discount and premium line. At this level, you know that we are in a counter trend heading towards a discount POI on that external. So in your internals, you'll be looking for all this downtrend structure to be bearish. So now all this downtrend internal structure, you know that on 4 hours, it will be 4 hour external, right? It will be 4 hour external. Good. Now that 4 hour external, that's what you might like take seriously a bit. But most of these higher time frames, you take the internals more seriously because the candles are very high time frame. Are you getting me? You're just predicting one daily candle a day. So why are you thinking about this large range? You should draw the large range, yes, but you're following this one squarely. So you're following it. The only reason for this large range is to know the turning point. Okay, now you're in a downtrend. Once you reach your downtrend, you're supposed to stop. You have to find a way for price to reverse. And how do you find that way inside this place? Is from the 4 hours. You want that 4 hours to start shifting bullish from here. You want the 4 hours to start shifting bullish from here, inside here. That's when you now know that okay, you're not ready to take the buys, or else you never take it. You want to see everything to shift. So this is how basically it works. So now I'll go to the chart and I'll analyze from scratch and show you how this thing works. Okay, before we start talking about entry and everything, like I said, SMC is the same for everybody. This market structure idea is the same for everybody. What differentiates traders is their entry. Is their entry. Some traders are using different kind of entry time frames. Some using 1 minute, some using 5 minutes. But we are day traders. We are not scalpers anymore. I know we're doing scalping last year, but we are day traders. I'm trying to day trade. So it means you're taking trade from 15 minute time frame, meaning you see fat stop loss, and you have to go with it. You have to hold trades for a long hours in the day. Even crossing to the next day is not a bad thing. Like, it's not like an abomination, right? So it's not like it's an abomination, right? To hold trades and the rest of them. It's just because you're taking trade at 15 minutes, and sometimes price might not be moving fast. Okay, so every trader has how they take their trades. Some take their trades from different ideas like entries, but you see, everybody must understand the same market structure, else you will not know how to trade SMC. Okay, so let's go to the real life chart. Let me show you how to implement this. First of all, how to draw my externals and internals and the rest. I know last class a lot of you guys are confused. I'm here to clear that doubt. Okay, I'm here to clear that doubt. Let's clear that out. So let's clear that out. So let me do something like this. Cleared, everything cleared, everything cleared. Let me start from here. So I'll go to the monthly chart. Like I said, please, if you want to start getting the very correct external structure, then you have to start from a monthly chart so that you can get the whole picture. And in your charts, you're drawing this in once and it's permanent, you're not changing it. It's going to be useful for even many years to still come. Yeah, because it just takes 12 candles to form a year inside this monthly chart. So you know how many years you are seeing right here. This started 2002, and you're in what, 2022, and I see the same bearish trend. That's 20 years. So you don't have to worry. Many of you here, your trading career is never up to it's never up to 2 years. All right. So now, how do we mark? First of all, identify the highest point and the lowest point on that monthly chart. You can now get a hand of what you're doing. So I like using this my highlighting tool here. I've made it my favorite. In case you're wondering where I'm taking my stuff from, look at it. I made it my favorite. Here I got it from here. I got it here highlighter. So I'll use this. So I'll mark here one. Now this is the lowest point. I've been able to mark my highest and my lowest point. Sorry. I've been able to mark my highest and my lowest point, right? Now, marking this highest and lowest point, I know I know my low. Okay. Now I know we are in a what? In a bearish trend. How do I know we're in a bearish trend? We started with this high. We're having internal breaks, internal breaks, internal breaks. All these breaks is not my business. But what's the rule? Remember the rule. Had it been price closed amongst all these breaks, had it been we had something like this. See how price is moving now. Sorry. So I think we're having something like the price was moving like this, move like this, move like this, move like that. We now had something like this. I would have cemented that here was a low. Are you getting me? Then we'll now go up, then we'll now start going down again. I would have cemented that here is a low. Here. Here is the low because after creating an internal high, it broke it to pull back more. Good. But that didn't happen. Look at them. They were just breaking, 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 breaking. So yo, you can't say that, right? I can't even say that for here. Because we did not break. It was just a sweep. I see that it was just a sweep. So that's why the only place that broke a high was here. You see that? Was here. Was here. I broke a high. That's the only place. So therefore, yes, it's a confirmed low because it broke an internal rather. So that is a confirmed low. So we have high, we have low. Now we are trading in this monthly range. Okay. We don't have any other market structure again. We are trading in this monthly range. So we are bearish. How are we bearish? We moved to the premium of this place and we went to tap a premium what do you call it, POI. So that premium POI is around this FVG we see right here. Okay, right here. That's it. So we off of that. And where is our destination? Draw on liquidity here. So I'll talk about draw liquidity separately, but let's get this one first. Okay, so we are heading here, here, right, right there. So we know that's where we are going to, but yo, this is the monthly chart. It take years to get here. So now we have known the externals. It's permanent. If there's any way you can lock up all these ones, you can lock them up. They should never change or move again. Okay? The way you can lock this POI here, you lock them all up, which I'm actually how to lock them in case you don't know how to lock them. Okay? In case you don't know how to lock them. So yeah. So let's lock them up. I'll highlight everything. Then minus this one. I'll highlight everything. Press Control, drag with your mouse, and then settings, visibility. Now minutes, no, it should show on minutes, it should show on hours, it should show on days, it should show on only month. Style, it's okay like this. Can we lock it? See the lock here, lock. So everything is locked, nothing can move here again. Even this one, I'm supposed to delete this one. I was trying to make an illustration with that. That's an internal structure. So everything now is okay. It's time to like identify internals. Now, marking internals from all this level is going to be very serious to your stress. So you have to focus on very recent price action, especially from a maybe point where it's reacting from um and a POI rather. So you have to just focus on recent price action. And recent price action is very simple. So we will know that this is a high. I'm gonna make it red. That's our high, and then this is our low. As price went here, price retraced, and then we pulled back, and then we had a new high here. This high was able to make price pull to this level. Okay, now this was a new cemented low. Okay, so price retraced back, broke this high. We feel bullish internally. Okay, for whatever reasons, hahaha. But yeah, so now we have been able to like break through this, right? Have we? Yes, definitely. We broke through this a bit with body and weak or both. Okay, let's make it tighter. A bit with body and weak, but yes, I know that we have shifted bearish back. Okay, because of how everything is. So as I've shifted bearish back, see that price has traded back into these areas. Okay, these are premium areas. I seen them. These are what premium areas price has to trade back to. Okay, now when you see um um big large range bullish last bullish candle before the drop, don't just go and be drawing the other block like that. Okay, it's not good. Instead look for bearish, the last bearish candle before the drop. If the bullish one is too big, too long, look for the last bearish one before the drop. This is how SMC own is. It's not like ICC. ICC own is different. Okay, so we have that registered, and that's where price actually retraced to. So our draw liquidity still pointing here. Now in a closer internal range, we know that it's down here, it's pointing out. Okay, very simple, easy. Now you would find out, we'll go to the daily, find out that this internal is what in the weekly is our external on the week. Sorry, this internal on the monthly is our external on the weekly. Very easy, very easy. So let's see weekly. Let's go. Now I made sure none of those things show here. Now you see, this were the internals we once marked on the monthly. Now you see how they are big right here. If you check on the weekly on the, on the weekly chart, they are they are responsible for the highest point of this chart and the lowest point. The same. They're responsible for it. So all you have to do is find your highlighter highest point. Okay, this was the low that led to it, right? So since that was the low that led to it, okay, what's next? Let's look at it properly. Okay, there's a high. Okay, that led to it. So has any high been able to break this? So sorry, let me look at my monthly. Okay, I did not even cement that we we are still in this range. Okay, so let's not stress and make it any more complicated, right? We'll just transfer the monthly internals to the weekly externals so that we can get things way easier for us. Okay, so yes, when we made that high, we made this low. Okay, let's focus on what's very recent. And we made this next, we made this next, we made this next, this next. Okay, based on external structures. Let's just leave it that way. Okay, let's just leave it that way. Because if you want to start drawing from all of these places, like draw here, we'll have here high, have this, we have this, have this. When we pulled back, this pullback is very like is very paramount. Get this pullback is very paramount. I don't know if this was able to clear everything, but I can't we can't ignore this pullback and say okay because it's this and that and say we are only holding to this. While it's not bad, but it's going to be too much, a too large range because we need just an external, not multiple externals. But if this is low, this is high, then what about all these lows? Are we going to call them externals? Sorry, we're going to call them internals because we are going to be in this range. We're going to call all these big swings internals. Never. It will fuck your trading up. Those are not internals. The internals are these smaller ones we see inside here. These highs and lows we see inside here, these ones. So when you're confused with the whole external internal structure bullshit, just transfer the internal structure marked on the monthly recent price action. Just transfer it to this level. Just do that. Don't even try to. Just transfer. If you just peep transfer, so like it doesn't get you very disturbed. So right here we have to draw here, make use of black lines so that we don't get confused. Our breaks of market structure. Our breaks of market structure. So now this was the example I was giving. Okay, see where this was the first time price broke here. Can you see? I see that this was the first time that happened. BOS. But did you see me go and start considering this as a new high because it broke here again? Never. This is an internal high now and low. I chose this as a low because when it was pulling back, it broke an internal high. That was when I can now register this as a low. Okay, good. That's the criteria I'm using to choose. Okay, so this is happening right now. So let's check if this was a sweep or a closed with body. So let's see. Okay, it's still a sweep, right? So, but even if it's a sweep, one thing you should understand, which I'll cover in liquidity, that even if it's a sweep, it's not a break. Sweeps are treated a little bit different from breaks. A little bit different from breaks in market structure. A little bit, but not totally. Okay, not not totally different. But I'll treat liquidity after this explanation. But this is a cemented low, whether you like it or not, whether you call it a sweep or anything, you can't ignore this low because it's a sweep. It is a new low created. Okay, so now price has been able to pull back to areas like this. Okay, this is supply. Now, if you check, this is the higher low trend that led to this. Now, this was the example I was making why we need the external this thing, um structure. You need it because since we agreed that we'll be focused on the internal side because these time frames are very big, so you can focus and trade all this. You need to know the external so that you can know potential turning points. It's not a bad thing to know, right? It's not a bad thing to know. So if you check our internals, you find out that price kept breaking highs and all that stuff. You know, kept doing that shit, kept breaking highs and stuff. So we had this official break here. So now it's very stupid of us that we get here, we want to still trade pullback and get here. No, that's wrong. The externals are more powerful than the internals. But we need the internals to get to the externals. The externals are more powerful, meaning if this external supply is pushing price down, if you still try to force bullish ideas, you hit stop loss for a long time. The losing streak will never end. Do you get? So now we are here. Now we're going to make this red so we can differentiate as usual. These are what internal breaks. It all starts from here. You can keep marking right. Now, if we go to the daily, this our internals in weekly will be our externals in daily. Now, can you see what I'm telling you? Can you see how it is? What I was telling you. So we mark them the way they are. They're going to be our what externals. Going to be our externals. See price breaking here, price breaking here. Okay, you can mark all the way long, but there is nothing. There's no need for that. Now I'll make this supply reflect so we can see where we are on the market. Okay, so now on the daily rather, I say we have plugged inside here. So now you might ask yourself, so now that we are plugged inside here, are we going to wait till there is a shift in market structure and the rest? So before we even start marking these higher highs with these lines, let's use our highlighter. For your externals, always use highlighters so it can be very clear, crystal clear. This is a low, this is a high, this is a low, this is a high, this is a low. Okay. Now from here we have another high. Now mind you, okay, this high, sorry, is this one. Do you see that? Is this one? Oh, okay, sorry, is this one, right? So now this new one is a sweep. Okay, it's a big sweep. Let's look at the weekly charts. Now, like I said, when we go to the lower time frame, we might get confused with the whole structure thing. But if we just carry what we have on the higher time frame internal chart and just replace there, it gets way easier. Okay, way easier. So based on that weekly internal structure, this is supposed to be our highest point, and let's leave it that way. Based on the weekly, our internal um demand zone is here. Let's leave it that way on the daily. Very simple. So we had a long expansion, right? Based on externals. Now let's look at internals. Based on internals, what's popping? Are you seeing we broke that? Can you see that? And then we created this high too, and this is the low responsible for this. So if price breaks this low, we know that internally we are treated bearish. But would we wait for many daily candles to print? So we'll not trade for many days just to be sure that we are flipped bearish like this to continue trying to sell? Never. Okay, never. So what we do is on the 4 hours you look for that bearish shift to now start attacking. Good. So now start attacking. So now I want to stop here based on this internal blah blah blah. This our internal daily. Remember, if you can track all of them, you find out that it's going to be our external in 4 hours. So now this is a core thing I want to introduce, right? Now this I'm going to cut this video here. Or wait, before I cut the video, let me go to the 4 hours and show you. Let me complete what I started, right? So now we are on the 4 hours. Okay, very clean. Now see that internals we were marking on daily. Can you see that it's now our 4 hours externals? So let's see here, right? It's here who is higher. Okay, this is higher. So see this, we see this, we see this. These are what our what externals. Okay, now why am I marking this? Wherever it's coming from, if you check on the daily internals, you know where it's coming from. But let's just start with these levels. So why am I marking it this way? I'm marking it this way because when we pulled up like this, we had this internal, low, and price had to break the internal low. That's how we cemented this high. And this high was with what high was responsible? Did price break? Did price do any break here? Okay, sorry, my bad. This high is higher than this. Good. So therefore, that's why this is what a low, because price, and this is another high too, because price tried to, this low was what broke this high. Okay, so it's a low. It broke this high, and this one was cemented as a high when price pulled back and took out this internal uh, um, structure here. So that's why we cemented this as a high. But then price still broke this place, so we flipped bearish at this point. At this point, you feel bearish, and if you check on that daily chart, you find out that that will happen. Okay, find out that that's what's happened. Let's change our visibility to only hourlies. Okay, let's change our visibility to only what hourlies, hourly time frame. Okay, so if you pick daily, find out that that what's happened here. You change structure to the downside internally. Here too is the same. I say, but we're using black lines because our external here. So now we've shifted bearish, but guess what? Price still made it towards break. I getting me. Now we have gone bullish back. Now inside here we have the internals, right? So this internals is going to be with red. Going to be with red. It's going to be with red here, and we had this high here and all of that stuff. And then this is another what internal low. And price has not broken yet. So as we broke here, price has not broken yet. So we have nothing to try to trade because we have not broken yet. So until we see that break in 4 hours internals, I tell you your internals are the immediate thing you have to trade. Your externals is just so you know your turning point so that you don't get lost following the internals blindly. It will not keep going higher, 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 low, higher forever, or lower, high, lower, low forever. It must change. Those turning points are internals, external, sorry, you'll find them and the higher time frames. Okay. So if we press my replay, if I keep playing, you find out that this was the part where we had, did it break below? No, it was still a sweep. But around this part, okay, now it broke below now. Around this part, you can now start looking for sell setups around here. Okay, this is an FVG, this is another block is up here, very, very, easy. If price enters inside this place, you can go to the 1 hour to refine it. So all of that entry pattern, I'm not going to talk about in this video. Let me not get you confused. I just want to talk about market structure mapping. So if you want to understand the strategy, that's when you watch the chalk backtest. I'll make more backtest videos. You get, but for now, you need to understand this thing and know how to mark your charts very well and know what you're anticipating. Now we can now in downward direction. Okay, we can now be anticipating price to enter here and look for entries on 15, which is more like something like this, right? And drop. Good. Now, also we price might fail here. Price might fail here and get here and do the same 15 minutes and drop. Simple. Easy peasy, right? That is how you trade it. Now, I'm done with market structure. Now, let's talk about draw on liquidity. Now, you have to understand draw on liquidity. When we start from the monthly, oh my God, how did all this get here? Those black highlights are just everywhere. Sorry, sorry. So let's go and clean all of them. Oh, I've scattered my this thing. Ah, my replay without even knowing. So yeah, something like this. So when we went on the, if I go to the monthly chart, I'll be seeing a lot of something that does not concern this time frame. All I'll do is just make this not visible on the monthly. It can be visible everywhere, but not on the monthly. Okay, so on the monthly chart, we had our draw liquidities, right? Please ignore this too. You don't get confused. I only use that highlight for externals. That's internals we're talking about, so you get it. So even this one, yeah.